Good afternoon, welcome to GrainTV. My name is Cody Bills, this is Logan Burgess. Today is June 28th and we had the planting intentions report as well as the quarterly grain stocks, and that lit a fire right under those old crop corn and soybeans contracts. For July, corn delivery trading up 12 cents, soybeans trading up 16 cents. However, the new crop contracts, as a result of the planting acreage report, ended up trading lower here, with corn for December trading down 27.5, soybeans for November down 23. We had wheat in Chicago for that July contract down 15, Kansas City wheat trading down 10.25 cents.
Yeah.
You know, Logan, I think one of the big stories here that people immediately started looking at was the planting acreage for corn. Can you break it down for us?
Yeah, absolutely, Cody. That was the big story here this morning. That caught a lot of attention when it was released. And as you can see here from the table, the middle column is what was expected. What was actually reported here is the right column, and you can see there is a huge deviation between what the market was looking for corn acres and what was reported today. The USDA came out 2 million acres above what the trade was looking for, and certainly that got the selling started immediately on the day, closing corn down 27.5 cents.
Yeah, absolutely. You know, that obviously pushed the market lower, but when you add 2 million acres and potentially over 300,000 or 3 million or 300 million bushels to the ending stocks, I would expect to see even more selling pressure here. You know, we were only down 27 cents on the day. Why is that, and do you expect us to see a 4 in front of this new crop number?
You know, in my opinion, Cody, looking at the action today, the selling did start off really sharply here. We came down and we found some support around a technical area that we've been watching, that 511 on the December contract. Continue to watch that area. But I think another thing that kind of limited the selling on new crop corn just in general was that some people were a little bit skeptical of this number. It was certainly shockingly large today. So I think that some people didn't have full faith in the number. But the bottom line is that this is what needs to be traded moving forward. And I think people are going to come into work on Monday, continue to sell this thing, because as you said, this is a substantial addition to production here for this upcoming crop. And I think fundamentally this thing needs to go down into the forest to compensate for it.
Absolutely. You know, another interesting thing to note here on soybeans, and this isn't a typical development here, but soybeans actually came in a little bit below analyst expectations in terms of the acreage, and yet it sold off as well. Why is that, and is the USDA doing anything funny there?
Yeah, well, you know, I think in general we saw a little bit of spillover from the corn trade today. Certainly, you know, as I said, that was a huge shock to the market, that corn acreage number that we saw. But the second thing as to why soybeans maybe wasn't able to hang in there is that there's certainly right now a lot of questions about the acreage report for soybeans in particular released by the USDA. After the report came out, the USDA said that they are going to be resurveying farmers here over the next several weeks. And if they find a need for any revisions, we're going to get a revision to acreage in the August report. Clearly, the USDA has doubts about their acreage projection today, and driving that was the late pace of soybean planting. This survey was conducted during the first 2 weeks of June, and even at the end of that period, we only had 85% of the soybean crop planted. Most importantly to note, only 77% of Iowa was planted during that time period. So clearly, the USDA thinks that the number that they released today, there are some doubts surrounding it. They're going to be resurveying, but the bottom line is that the trade, I think, kind of recognized that, and as a result, that didn't help prop up that new crop soybean contract really at all in today's action.
Absolutely. You know, one other thing just to note here, we had the stocks report, and what was interesting is the whole day's trade was really a tale of two markets. You had the old crop July contracts rallying here, and then you had the new crop contracts selling off. One thing when we look at the stocks numbers is that we had corn being revised lower than analyst expectations. It came in about 81 million bushels below analyst expectations. Soybeans was about 7 million bushels below analyst expectations, and for wheat it was down 27 million bushels below analyst expectations. These were all relatively bullish numbers, but and we saw that actually unfold in the trade. We saw corn and soybeans rally there. For corn, you know, the initial part of the trade, I think it started to follow the acreage numbers because it actually went negative on the day, but it caught a little bit of support there. It it found a little bit of a bottom. In the last 15 minutes, we really saw a rally in the corn market for that July contract.
Yeah, absolutely. You know, soybeans today, Cody, a real area of strength on the old crop. What's kind of your take there? What's kind of your direction this market's going?
Well, you know, we have incredibly tight ending stocks, as according to the June WASDE report. I think it was somewhere around 4% stocks to use ratio, and now we're getting a little bit smaller amount of stocks than we expected. We saw more use for this grain in the last 3 months. So the bottom line for me is that we have a smaller amount of stocks, and because of the late plantings, we're not going to be seeing that new crop grain out of the fields for probably a week or two delayed. And so the bottom line here is we have a smaller amount of stocks trying to stretch a longer amount of time. That's going to pop that July contract. But keep in mind here that today was first notice, and that this will start to lose its liquidity as we move toward the last trade day.
Yeah, we certainly did see at times today a relatively light trade in the front months there for July corn and soybeans in particular. But yeah, as you said, today was first notice day. Time to start rolling to September for corn and beans and wheat, actually. But Cody, in general, in my opinion, it really seems like today's numbers have kind of set the stage here, really, for the next month. We're not going to have another major report until we get the August WASDE report, or excuse me, the July WASDE report coming out. So it seems like I think the action that we saw today is going to carry over into next week. Is that a fair assessment to you?
Yeah, and particularly for that December corn contract, like you had mentioned, I really think that we could continue to see some follow-through selling. As it did find a little bit of support technically, and I think some of that support is probably going to dry up here as we move into the next week.
Yeah, absolutely. Well, it should make for an interesting open to the night session on Sunday night here. If you guys want to watch the night session for yourself or have direct market access to it, you can visit us over at grainhedge.com and take a trial of the trading platform that we use here on GrainTV. In general, though, that's kind of our take on what the numbers today meant for the grain market today and moving forward. Thanks a lot for joining us on GrainTV, guys. Have a great weekend. We'll see you back here on Monday.